Hello friends, today we all will be talking about the basics of accounting. Now why we all require to learn the accounting again? Why do we need to learn the accounting? Because if we see here this particular unit, fish marketing, we are dealing with the business part of our zoology subject. How can we take the fishery as a business? So when we are talking about business, we must, though we are not the commerce student, we must know the accounts. So what is accounting? Actually, accounting is a process of recording financial transaction which are related to the business. So it will include all and all transactions which we are doing in our business. So it's simple what we can say, it is the information system which reports on the economic activities and financial condition of the business, or it could be the any organization like your institute. So there is a need to be system or set of rules which we are able to compare entities to each other. So these rules are nothing but the account. So what is the account? Account is a record of financial activity of business. Each and every transaction of the business will be recorded into the accounting system. When we say account, so account has two most important part. One is debit, another is the credit. So we make the table, and into the left side we write the debits, whatever things we are spending in our business, and next is the credit, what we are earning from our business. Then when we talk about the accounts, there are two most important type of the account: personal account, impersonal account. Impersonal account is further classified as the real account and the nominal account. So let us discuss the types of account in details. When we talk about the personal account, student, you must remember it with the term person, means it is related to a person. So the person can actually be the people, like one anyone XYZ's account, ABC person, human account, okay, like my Sabah's account, Shadab's account, like this. So it could be the people account. Then when we talk about, it also includes the organization account, Rizvi College account, it could be the company account, so and so company account, then it could be the trust account like Rizvi Education Society's account, Help Yourself Foundation account. So it could be any type of account which is related to actually the person, means the people are handling that particular account. When we talk about the impersonal account, as I already told you, it is further classified in two. So first is the real account. So this is the account which is not related to any human, but it is related to the things, it is related to the assets, it's related to the possessions. Then the nominal account. Nominal account are our income and expenses. Example, whatever nominal charges we are paying, like salary, insurance, as well as your utilities, rents and all. So this is the nominal account. When we talk about the accounting, so definitely as we have the three type of account, so there are three type of rule for the accounting: debit the receiver, credit the giver. That means the receiver, one who we are getting money from the debitor, and the creditor is the giver. Second is the real account: debit what comes in, credit what goes out. So here debit what comes in, what we have to, we have got the light bill, so we have to pay that. Then credit what goes out, whatever things will go. Nominal account, so here definitely what is going to be debited, expenses. What is going to be credited, the incomes. Now we will learn little bit terms which are very new for us, so I want everyone to note down all the terms which are related to account. First term is the transaction. Now we always heard, we have done the ATM transaction, this transaction, that transaction. So the literal meaning of transaction by Oxford Dictionary is it's an instant of buying or selling. Now, when we talk about the transaction, so it is action of conducting the business. Now, when we say transaction, so one part of transaction involves the transfer of good or service, right? Transaction could be of the goods, the transaction could be of the service, while other part refers to the transfer of money. If I am getting, one part means I am a purchaser, so I am getting good and service. Suppose you all are coming to the college, you are getting the service of learning, we are teaching you, so this comes, we are getting some salary, right? So this is the transfer of money. So on the basis of the transaction, transaction is also categorized into the two part. A cash transaction, definitely it's a very simple transaction that immediate cash to be paid. You have purchased something online, a phone, say example, you have purchased and you have to pay the amount immediately. So along with the good and transfer, you are paying the cash immediately. So this will be called as the cash transaction. The second type of transaction is the credit transaction. So credit is nothing but in our general term we call it as a udhar. So here is a time gap between the transfer of good service and the payment of cash. So suppose I have purchased one thing on the loan. Okay. So I have taken it on today's date and I have to pay the amount in the month of December. So there is a gap between the good service and the payment of cash. Suppose I am staying in a particular area and after staying whole year, after a year I have to pay the money of that home, okay, the rent. So that is a credit transaction. The second term is the debtors and creditors. So debtors, uh, when we do the credit transaction, okay, in that time we are getting two type of relationship. One is the debtors and another is the creditors. First, we'll talk about the debtors. Is a person who owes money, means one who have to receive the money from him. Okay. Then second is the creditor. Creditor is a person to whom money is owed. We have to pay. Okay, we have to pay money to him. Profit and loss, we all generally say nafa nuksan in our general term. So when we talk about the profit, so profit is excess of business earning over business expenditure. I have spent 1 lakh rupees in my business and after spending that, my earning is 1,20,000. So this 20,000 means my business expenditure is 1 lakh and I'm getting 20 lakh extra out of that business. So this 20,000 is my profit. Loss is exactly opposite of it. Loss refers to the excess of business expenditure over business earning. I have invested 1 lakh rupees, but after doing the business, I am just getting 80,000. So the gap, this 20,000 is nothing but my loss. So for now we are doing business, so for taking it consideration, we all need to make the profit and loss account. As I have already told you that for each and everything separate account has been maintained into the separate sheets. So profit and likewise we have the profit and loss account. In the profit and loss account, left side we write down the expenses. Expenses include each and everything, children. Each and everything means whatever things you are spending into your business. It includes your rent, it includes your whatever light bill, your daily, say suppose you are giving nashta to all employees, each and everything will come in your expenses. Okay, suppose every day you are giving teas or whatever snacks to your workers, that will also come into the expenses because it also comes with money only, na? For you it is just simply a snacks, but the who is paying for that snacks? If company is paying, business is paying, or your institution organization is paying for that, your light bill, your rent, your each and everything. Then incomes, how many customers or whatever sale is there, or you can say how many students are joining your classes, whatever incomes. So we are writing the incomes into the right side. Students, this is very important to remember. If your left side amount is more than your right side, that means if your expenses are more than your income, you are at lost. I repeat, if expenses are more than income, we have a loss. If income is more than expenses, definitely we are at profit. So this is about profit and loss account. Let us discuss the next term. The next term is assets. Now, what is assets? Simply, assets are our resources of the business in term of money. Simply, we can say this is the value of business that can be converted into the cash. Whatever things you have, if you can sell and can get money, so you will say it as a assets, means the things can be converted into the money. Whatever things you have in your business, it covers money and other valuable belonging to an individual or to a business. When we talk about the types of asset, asset is also having the two types: fixed asset, which is also called as the long term asset. Next type is the current assets, which is also called as the short asset. Let us discuss the types of assets in details. First, we'll talk about the long-term asset. As I told you, the long-term asset is also called as the fixed assets. They remain with the organization for the long time. That's why we are calling it as a long asset. Some example of fixed assets are land. It could be the building. It could be the plant, machinery. Okay, so furniture, whatever things. So whenever you are selling them, see, we don't require to sell them, but if you will sell all this thing, definitely you are going to earn some money. That means we can convert it into the cash. So and it remains with us for a longer time. That's why this all is called as the long-term assets. The next type is the short-term assets. Short-term asset is also called as the current asset. Now this will keep on changing regularly. Why it will keep on changing regularly? Because the current assets are affected with the market. So we are getting profit and or anything loss. So we are getting is because of the current asset. Some example are the stock. If the stock price increases, definitely your current asset will also increase. Then debtors, bank balance, all these things are related to your current asset. The next things is the liabilities. Liabilities is exactly opposite of the asset. Liabilities means, see, assets what which we have, liabilities what we have to pay. Okay, so these are the obligation of a business which the company has to pay. Simple word you can say, these are the expenses of the company, what company is investing. So liabilities is the amount which business enterprise has to pay to the other. Like assets, even liabilities are of two types: short-term liabilities and the long-term liabilities. Let us discuss the types of liabilities into the detail. The first type is the long-term liabilities. So, see, long-term liabilities means it includes liabilities which we do not need to pay immediately. We have for long time. That's why it is the long-term liability. So this refers to the loans. It refers to the borrowing, which we do not need to pay the immediately. So exactly opposite of the long-term liabilities is the short-term liabilities. Short-term liabilities we also as the current liabilities, means which we need to pay immediately. Understood? So current liabilities will keep on changing regularly. but that will not change. The long-term liabilities will not be changed. Some example, if we will say, is the creditors, right? Whatever to whom we are going to pay. Outstanding expenses, bank overdraft, which we need to pay immediately. The next term is the net worth. Net worth, how to remember net worth is the punji, is the total amount, okay, which we have spent in a particular business. So it is the total assets. What is asset? What is asset? It's a fixed asset and the current asset, what we all have learned. So it is the excess of total assets over total liabilities. So how can we write it? Net worth is equals to total assets minus total liabilities. Okay. So actual what is amount? What amount we are getting is the net worth. So it is the capital fund of the owner of the business. It is a capital fund, not the capital amount. The student capital amount is different capital amount which we invest into the business. So this is the capital fund what the businessman actually have. So if a business is having the proper net worth, say example, one person has started a business with amount 1 lakh rupees, okay, and the person is having the 1 lakh rupees loan, okay. So that means the liabilities, but in profit and loss account this will not be shown. Profit and loss, you are observing that 1,20,000 is the business done, okay, but in the net worth, actually the net worth is 20,000 only, okay. That means the person is at 80,000 rupees loss. Then balance sheet. And what is the balance sheet? It is the sum up of all the things. It includes the assets, liabilities, net worth. These all things are present in a sheet. That sheet is called as the balance sheet. You can say it is a simple progress card of a company, a financial statement of company for the financial year from the 1st April to the 31st of March, whatever earning or whatever business has been done by the company is shown into the balance sheet. So balance sheet shows the actual financial condition of the company for that particular year. It is very, very important for all the businessmen to prepare the balance sheet for by the income tax department, as well as they have to publish this if they are doing the transaction, if they are doing the selling the share. So it is very important to show this balance sheet every year on the company's website. Now through the balance sheet we can see whatever whether the company is making loss or getting the profit, how much loans and dues the company has to pay, and what are the assets of the company. If balance sheet is not been prepared, we cannot get the actual situation of the company. So when does this balance sheet is being prepared? So this is prepared at the end of all account, even the last date. So till 31st of March, whatever the expenditure is done by the company, everything is included in this balance sheet. So we can say it is the sum total of all the account. I told you that we are maintaining the different type of account. We are making the profit and loss account. We are making the real account. We are making the nominal account. So each and everything, all the accounts will be included here. So there are two sides of the balance sheet. One is the asset and another side is the liabilities. This is the format of the balance sheet. So here one side, that means the left side, we write down all the liabilities. Now what would be the liabilities? It is the net worth, that is the share capital, long-term liabilities, short-term liabilities, and fixed asset, current asset will be written to the right side. Students, we need to remember this is a balance sheet. So this total and this total must be equal. Now capital, what is the capital? Capital is the amount which one invests into the business. So this is the amount which is invested by the owner into the business. So if you are getting the profit, so definitely your capital will increase. But if a person is getting loss into the business, so that is going to decrease the capital. So net worth is also called as the capital. Now, what is the capital expenditure? Expenditure is nothing but the kharcha, whatever we are doing into the company. So, this expenditure on acquiring the permanent benefit, it involves the acquisition of the fixed asset, whatever fixed asset. Now, I told you about the fixed asset. Fixed assets are the lands, these are the plants, company, places, halls, and all. So, see, this is for that particular reason, this is not recurring into the nature. It will give right to new source of income. Say, example, you have a big hall or big lawn, so you can give it for various parties and meetings. You will get the extra money, so you can start new source of income with that. The point to be remembered about the capital expenditure is that the capital expenditure is recorded into the balance sheet. Okay. Then next type of expenditure is the revenue expenditure. It is the day-to-day expenditure. Whatever wages we are using, its benefit received within the year. So definitely it is going to be recurring into the nature. It reduces the profit. Whatever profit, say I have one business, in that particular business I am getting 1,000 rupees profit per day, but out of that 1,000 I am giving snacks, 100 rupees snacks to my worker. I am giving 100 rupees for traveling and all. So whatever, it is going to decrease from my profit part only. So definitely the revenue expenditure, it will reduce my profit. So definitely where it will go? It will go into the profit and loss. And capital expenditure we have seen goes into the balance sheet. So indirectly profit and loss account is also included into the balance sheet. So indirectly it will go into the balance sheet at that. So this is all about accounting. We must know that the accounting is very important. How it helps? It helps you to prepare the budget and keep on target. It realize how much cash you have, and if there is enough to pay the bills, uncover places where cost can be cut. So if we have the proper idea of accounting, if we learn the accounting in detail, definitely the knowledge of accounting can help a person to understand and start a new business. Now see, if we are starting business, we are science students, we are starting business directly without having any idea about accounting, we cannot keep track of our profit in business. That's why this particular part is been included in our syllabus. So this is all about accounting. And if you have any doubt, definitely you all can ask me.